So good afternoon. Welcome to Tax Accountants. Thank you all for joining us for the latest in our series of tax planning webinars. And this one's focused very much on sole traders and partnerships. So we'll start with some introductions first. My name is Darren Moore and I'm Group Commercial Director at TaxAssist.
I'm Andy Gibbs and I'm the Senior Technical Manager for the TaxAssist Group.
So Andy and I are going to be talking through some tax planning ideas, sharing some experiences from our network, sharing our own experiences. I think between us we've got something like 40 plus years in practice.
Yeah.
So we've got some ideas around tax planning. So we're going to talk about what tax planning means because that's quite often misunderstood. We're going to talk about some specific ideas around how we can help you, and we will cover off some COVID specific points that we think are relevant. And obviously COVID has rather dominated things for the last 6 months. So we need to really cover some areas that we think are particularly relevant as a result. So they're the things we'll be covering. I'll start with just some quick background. So tax accountants, some of you will know us. Some of you already be clients working with our network of accountants, others perhaps not. So we are a network of accountants across the UK with about 370 locations, looking after about 77,000 clients, most of whom, almost all of them, are small businesses. So we've got that benefit of all of that joined up experience across that network to share with you. So that's one of the things we'll be covering today. We do want to try and help you with questions along the way. The content today is quite broad, I think, because there's quite a lot to cover. So we will be going through it quite quickly. So please do use the chat box to ask questions, and we will try and come back to that at the end. We should have 5 or 10 minutes so we can answer those questions if we can. We will be recording this webinar and it will be available for future reference, future use on our website if you want to look at it again in a bit more detail. So that's the running order. Let's just start with a bit of definition around what tax planning is. It just sets the scene really. And the reason we're doing this is because tax planning, I guess, gets a bit of a bad press. There's lots of negative press out there about tax planning and challenges around tax planning. And the reality, of course, is that tax planning is perfectly legitimate and actually very sensible. It doesn't have to involve complicated arrangements and structures and things that could be deemed as illegal or perhaps not the correct way of doing things. It's about legitimate tax planning. So it is relevant for all taxpayers. It's not just the domain of large businesses. And it doesn't need to be expensive. There are, as we'll talk about, some pretty simple tax planning techniques that you can talk to our network of accountants about. So that's great. That's a quick breakdown of what tax planning is. It's always useful to get a definition of tax planning, and there's lots of different ones out there. Our view is it's about making sure that you pay the least amount of tax you're legally obliged to pay. I think one of the views is that tax is a fixed amount and you pay it at a set level. That's true in some cases, but actually an awful lot of tax isn't optional, but it's certainly variable and is subject to good tax planning. And that's really what we want to cover today. Sensible tax planning that's perfectly permissible, but will help you reduce your overall tax liability. And we're all taxpayers. None of us particularly like paying tax. So ideas around reduction in tax is always welcome in our experience. So that's the overview of what we're going to be covering. Andy's now going to talk through a little bit more detail of some of the ideas of how we can help you.
Thanks very much, Darren. We're going to go through ways that we can help you. I should say at the beginning, really, although we're going to cover some of the COVID-related issues toward the end of the presentation, obviously it's going to affect things in terms of our current planning as well. So COVID is at the forefront of our minds when we're trying to look at planning to try and help you, understanding some of the advantages and some of the changes that have been brought about. There are various reliefs and allowances which you're perfectly legitimately able to claim. So here at TaxAssist, we want to make sure that every single relief, every single allowance is claimed, and also every single legitimate expense that you have is claimed, some of which you may not be aware of. We want to make sure that we maximise all of those claims for you. So the ways that we can help you with that is we can review your records and ensure all allowable expenses are claimed. We'll come on towards the end about how we can help with other solutions to make sure that your records are really up to date and you have real-time information. But really knowing your numbers is key, particularly at this point in time, so that you can really make sure that you know your business, you know what's happening with it, and you can take action to prepare for unexpected tax bills and make sure that you've got enough capital to keep your business working properly. We can help advise you in terms of making pension contributions. We'll come on to these again later, but really valuable relief which you shouldn't lose out on if you wish to make payments. and also capital gains tax. Capital gains tax can arise where you dispose of capital assets. So it's things like maybe a property, particularly rental properties, which will generally be subject to capital gains tax. If it's a disposal of your own home, it will probably be exempt from capital gains tax, but we can help confirm that and make sure that there aren't any reporting requirements. If you do need to pay capital gains tax, perhaps from the sale of a rental property, perhaps from the sale of a property used in your business, or perhaps because you're closing your business down and you're selling it, we'd love to speak to you to make sure that you pay the lowest amount of tax and claim all the available reliefs. And there's a few other services as well that we can help on your journey, whether it's helping you when you start up, whether it's helping when you're towards the exit of your business, and also in between, if you're looking to change your business structure to maybe make it more tax efficient if you've grown. We'd love to help with all of those problems that you may face. So we'll start off looking at some normal expenses. The basic rule is that you can claim any legitimate business expense, and the phrase the revenue would use is they have to be wholly and exclusively for the purpose of the trade. Provided they meet that criteria, there is absolutely no reason why you cannot claim legitimate business expenses. For sole traders and partners, it works slightly different to limited companies in that the revenue, even if they can see that there is some personal element, as long as we can show that there is a distinct business element, we can probably make a claim. So one area you may have a legitimate claim is travel and business and motor expenses. If you're using your private car for legitimate business mileage in your sole trade or your partnership, we should be able to make a claim. We can either advise you on potentially claiming capital allowances for the actual capital cost of the car and related motor expenses, or in certain instances we can help advise if it's better to use what they call the HMRC simplified rates. So if you're doing mileage, perhaps small mileage, more modest mileage, we can still make a claim for you there. So it's definitely worth getting in touch with us, letting us have your records, we can help. If you're equally looking at purchasing a new vehicle for your business, again, we can help. We can help you work out what tax relief you can claim, but we can also help decide which is the best method of purchasing that vehicle for you. You may have lots of options. You may wish to lease a vehicle. You may wish to buy a van outright. You may wish to purchase it on HP. All of those situations will involve a slightly different way of taxing the vehicle. We will work with you to make sure that we maximise those claims. And it's fair to say that with changing trends, green technologies are really at the forefront of everything. And again, if you're looking at maybe electric vehicles, then there's some very, very attractive tax rates that we can potentially claim relief for you there. So definitely worth getting in touch. If you use tools and other equipment in your business, it doesn't matter how small those tools are, we can possibly make a claim. So it might be that you're a hairdresser and you've purchased some scissors for your hair salon. These will be something that we can make claims on. It may be that you are trading on a building site and you've had to purchase tools to use in your trade. Again, we can make claims for those. With training costs, it can be a little bit more complicated, and there will be certain instances where HMRC may block claims, but training costs for ongoing training are generally tax allowable. So if you've incurred training, and this is going to be particularly relevant now, because if you are in the situation where you've had to retrain, or if you're in the situation where you've had to upskill because of COVID, then this is definitely something talking to us about, because we can help make sure that we maximise that claim. Household expenses as well. Most sole traders may be not aware, but it is possible to claim for an element of your household expenses. We can help explain the difference between the two main methods of doing that. You can either choose to have expenses deducted using HMRC standard rates, which will allow an amount to be claimed per month based on the number of hours you're working in your trade. Or we can explain there's another way to look at it, which is to look at the amount of your home that you're using for your business. And if, for an example, you were in the beauty industry and perhaps you have a room in your home that you're using for your business, you may very well benefit from that way of claiming relief. And if you haven't yet made a claim for those expenses, then again, we'd love to help. Another thing that businesses may be aware of is that if they have any bad debts, it's really important to analyse that very carefully so they don't get included in the turnover figure. So again, if you're coming to your year end, if you're wanting to talk to us about any debtors that you have, then we can help we can help clarify the tax position on that, make sure that you don't pay tax on income that you won't ultimately receive. There may be other opportunities as well. For some sole traders and partners, it may be very attractive to include their spouse in their business. If you include your spouse or your civil partner in your trade, it's possible to claim for wages that you pay. There are a few rules there which we'd be happy to explain. The spouse or the civil partner has to be actually paid, so there has to be a physical payment to them. The payment really has to be based on what you would pay a third party to do the expense for. And so you have to look at things a little bit more carefully. But if you did want to include your spouse in your business, then again, it's a good way of maximising your reliefs, your spouse's allowances, to reduce the amount of tax that you pay. So we'd be happy to discuss that and help you decide if that's appropriate for your circumstances. Stock is another area to watch for. If you're carrying a lot of stock in your business, we may be able to revalue it at the net realisable value if this is a lower figure than what it's being shown at cost. Again, this is something we can help explain. But the essential thing is that if you're carrying a lot of stock, which you aren't going to be able to sell, then lowering the value will save you money. So again, it's something that we can help with.
And that's post-COVID, as retail changes, that's a particularly relevant point as a stock that some people may be carrying, isn't it?
And it's something that is often carried year from year and year and not properly analysed. So definitely something to look at. If you're a business where you have to be registered for VAT, or you've just decided to be voluntarily registered, we can also help scrutinise your expenses to make sure that we reclaim all the VAT that we possibly can. We can also look at the scheme that you're on to make sure that you're on an appropriate VAT scheme for you. We can also look at making sure that you don't pay VAT on invoices and work if you haven't yet been paid, because there are schemes that may be more appropriate for you than just paying it based on your invoices. So if you wish to speak to us, particularly about any VAT that you may have incurred before you've started your business, again, we'd be happy to help explain the rules and make sure that we recover all of the VAT on your first VAT return when you're starting up in business. But equally, if you wish to discuss VAT, whether you should be registered, whether you should deregister, or if you're on the right scheme, do talk to us. All of that is legitimate planning that we can help with. And as I said, we'll always make sure that we go through your records and claim every single amount that we can and all of the VAT. Another area that we would like to help you with is with pension contributions. If you need any financial planning advice, we can help point you in the right direction of a financial planner. But we would love to explain to you how the tax relief on pension contributions work. Everybody in the UK is entitled to contribute to a pension. The absolute minimum that anyone can put into without going awry of any of the tax rules would be £3,600 a year gross, which is about £2,880 net. And I just want to explain what I mean by that. With personal pension contributions, which will generally be the scheme that sole traders and partners can use, for every £8 that you put into a pension from your bank, HMRC will contribute the basic rate of tax, 20%. So for putting £8 in, you'll have £10 in your pension pot. If you pay tax at the higher rate, then we can claim additional tax relief on your pensions. So if you have done your own tax return perhaps, and you are higher rate, if you haven't claimed for your pension contributions, please do talk to us. Equally also, if you want advice on how much you can put in to not fall foul of the HMRC limits, because there are upper limits on how much can be paid in if you don't want to avoid tax charge, then again, please talk to us. We'd be very happy to explain how you can maximise your contributions and how you can also potentially get tax savings from doing that. It's a very valuable relief, one of the few reliefs that's actually left. So it's very important that you maximise that where you can.
Yeah.
Capital gains tax. As we said at the beginning, certain capital assets, so things that have long-term lives and enduring benefits to you, will be often subject to capital gains tax. The most notable one for most sole traders will be any rental properties that they have, any premises that they use in their business that they own, or when they come to sell their business. We want to make sure that you pay the lowest amount of capital gains tax possible. So we'll again scrutinise your claims, make sure that if there's any associated costs, we can claim them against the capital gain, and equally also make sure that you pay at the appropriate rate. The top rate of capital gains tax for sales of residential properties is 28%. Top rate of tax for non-residential properties, so things like shares, is 20%. But there is a special relief called entrepreneurs relief, which can, for qualifying gains, for things like the disposal of a business from a sole trader, can qualify for rates of tax at just 10%. So please do talk to us about that. If you're thinking of selling your business and you need help, then please do come and speak with us. There's a number of other services that we'd be very happy to help you with as well. If you're a landlord and you have any rental properties and you would like some help with dealing with these, then we'd be happy to help. We can, as well as helping you with your sole trade, income and expenses, and making sure that we maximise claims, we can help explain the rules for you if you're a landlord. We can help make sure that you claim all the available expenses, and we can help ensure that all the reliefs that you could possibly claim are claimed. Equally also, if you're at the point where you're considering some of the tax changes that have come in recent years, you may be looking at reducing your portfolio of rental properties. If you're thinking of doing that, these will generally be subject to capital gains tax, and if that is the case, the gain needs to be reported within 30 days to HMRC to avoid penalties. So before you do that, please do talk to us, because we can explain the compliance obligations that you have, make sure that you get everything reported correctly, and make sure that you pay the least amount of tax. Equally, you may also be in a part of the UK where there's been some changes to the land taxes, and you actually may think, actually now is the right time for me to get into buy-to-let or extend my portfolio, because there have been some changes. In England and Northern Ireland, the SDLT rates have been reduced. In Scotland, the LBTT rates have been reduced. In Wales, the Welsh land tax has been reduced, but not as generously as in the other regions of the UK, so landlords don't stand to benefit in the way they do in other areas of the UK. We'd be happy to help explain those changes and how you could take advantage of those if you are thinking of investing now. So if you have been put off by changes that occurred in the past because of introductions and increases in land taxes where you purchase properties, and you'd like to talk about your future plans and whether that's been changed by the changes made by the Chancellor recently, then please do get in contact with us. We'd love to help you with your payroll. So if you do have staff and you are confused by the payroll rules, confused by the auto-enrolment obligations, and having to put your staff into pension schemes, then we'd be happy to help take that burden off your hands and deal with all your payroll needs. Another important thing to think of as a sole trader is whether the business structure is right for you. Certainly in the first years, being a sole trader is great because there's some really good tax advantages that we can help you with. So for example, if you incur a loss, which means that your expenses are exceeding your income, in any of the first 4 years of a new sole trade, you can carry those losses back up to 3 years. So in any of those first 4 years, we can analyse previous year's income to make sure that we maximise the loss claim for you. Equally though, as your business grows, and hopefully it gets to a level where you are no longer in loss situation and you're making decent profits, the sole trader route may no longer be appropriate. It may in fact benefit you to trade as a limited company. There's a number of tax traps there, and also some really big advantages, because at higher levels of salary, it will generally save you tax to be remunerated, take your money out from a limited company rather than as a sole trader. So if you have any queries in respect of that, if you're a new business starting out, if you are at the point where you would like to think about running as a limited company and all the advantages that can flow from that, then we'd be really happy to help.
I think it's fair to say there's no right or wrong answer to becoming a limited company. It's very much around your personal circumstances, and it's probably the single biggest area of planning that we can help with in many ways for sole traders. So that's definitely something that we can help you with in terms of talking to the accountants in our network, because it will be around understanding your circumstances and understanding what's right for you. Because as Andy says, there are opportunities there, but there are traps as well. So it's really important to plan that properly to make sure you're getting benefits in the right way.
Exactly, yeah. And as you say, it will be, there is no right answer, because for most businesses it may very well be you start off as the sole trader and you go to the limited company.
Yep.
Just making sure that that timing works for you to make sure that you save the maximum amount of tax. And of course, there's a number of commercial considerations that need to be helped with. We haven't covered IR35 and the changes that relate to this in this webinar, but again, if you are a contractor and you have a limited company and you wish to discuss any of the changes, then again, please do get in contact, because we'd be happy to help you there. As we said at the beginning, although we wish to maximise reliefs and claims, there are a number of COVID-related issues that you really need to be aware of right now, due to the disruption that's been hitting the economy. In order to support the economy, the government has introduced a number of schemes to help businesses out. For sole traders, the most important one is the Self-Employment Income Support Scheme, the SEISS. This is designed to give a grant which is taxable to self-employed individuals and partners where they've been affected by coronavirus. We'll come on to a few of the rules in a second, but the important thing to note is there's been two grants. So the first grant has already closed, unfortunately. So if you haven't claimed for that, unfortunately the window has now closed, and it closed back in July. That grant was based on 80% of average monthly trading profits and capped at £7,500. So if you were able to claim the maximum grant, you would have received a taxable grant of £7,500, hugely valuable to keep businesses going, keep the wheels turning. But there is a second grant, and this second, and as far as we're led to believe at the moment, the final grant is worth 70%, so slightly less of average trading profits, and is meant to cover 3 months worth of profits. It is capped at a lower amount, £6,570. Claims for the second grant have already opened, and we've been delighted to have helped a lot of people claim those grants. We've got an awful lot of information on our website which will provide free resources to help you make those claims. Unfortunately, HMRC, in their haste to get this relief out and pump this money into the economy, didn't allow a facility for accountants to claim this directly on your behalf, but we can signpost you and have given all the information that you will need to make your claim. So do look at our website. There's a huge amount of resources, Q&As and support to make sure that you can claim your grant. To be eligible for the second grant, you have to show that your business has been adversely affected by COVID-19 on or after the 14th of July. But you must make your claim on or before the 19th of October. Now, to be fair, HMRC should have communicated with you, but if you haven't checked your emails, if you haven't got a communication, then you need to get on with that, because you don't want to lose entitlement to make the claim. The claim will end in October, as far as we're led to believe, so make sure you claim money. In terms of how HMRC will calculate the claims, they will do all of this for you. So as we explain on our website, there will be an easy way for you to review your claim and check it. And it will be based on average profit over 16-17, 17-18, and for the year ended 5th of April 2019. That's how they'll determine the grant. There's a few other caveats to watch for, because your trading profits can't be any higher than £50,000, and more than half of your total income has to come from self-employment. And again, HMRC will generally have this information from your tax returns. As we said before, because people have to make these claims themselves, we have put all of the resources that you will need to make your claim on our support, on our website. So please do have a look, and if you have any concerns, do contact us.
Actually, on the subject of the website, it's probably well worth you looking at that now in terms of other content there, because there's a whole range of content, both COVID related and more general. And the other point I'd make is we are in rapidly changing times. None of us are sitting here knowing exactly where the government's going to go in terms of future intervention, budget changes, etc., etc. So our website will always contain latest information to try to help you. So do stay in touch and do keep looking at that website, because we do make sure it's up to date, reflecting everything that we learn as soon as we learn it. So hopefully useful resource for you.
And we've got all the appropriate hubs as well, to be fair, so it's easy to find whether you're looking for funding, startup, all of those sorts of things. We've got the resources there to help you. Other areas that we may be able to help you with, we may be able to signpost you for funding. So in certain instances, the SEISS grants and the other support that the government has done may not be enough, and you may need to get funding. So we can help talk to you about the funding options that have been made available because of COVID, and particularly bounce back loans, which may benefit you and your business. If you are paying income tax, you will possibly be aware of how income tax is charged in the UK. At the end of the tax year, which is the 5th of April, we will work out your income, deduct your expenses, and advise you of your taxable profit. And the tax due on that is due on the following 31st of January. If it hits certain levels, then as well as paying tax in January, you also end up with an income tax payment in July. To support the economy, the government has automatically deferred payments that were due on the 31st of July 20 until the 31st of January 2021. That's good news. It's good news to not have to pay that tax, but bad news if that liability is building up. So one thing to help make sure that there isn't too much excessive payment, because some of these payments are based on notional profit, is to get your records to us as soon as you possibly can, because we can then give you a payment calendar so you know where you're at, you know what payments are going to be coming due. Equally also, the government has allowed a deferral of VAT. So if you're VAT registered, the VAT that was due between the 20th of March and the 30th of June will have been automatically deferred. You could have potentially paid it, but if you have chosen not to pay it, it will fall due on the 31st of March 21. All of these deferrals are really great because they'll help support you in your business, but it's important to realise they are just deferrals and the tax will fall due. So it's important to start planning now so that you have the funds available to pay the tax when it does fall due.
So, Andy, thank you. That's a fairly quick run through an awful lot of content actually there, and it just demonstrates how many different things there are to think about as a sole trader or as a partnership, and how many different ways accounts can help you perhaps along the way. So, putting tax to one side, we've quickly set out here some services that we think are relevant at the moment. Now, this doesn't represent everything we can do to help. We offer a huge range of services to our clients because small businesses, individuals have lots of different needs. These services that we're highlighting here are really ones around the point that Andy made earlier, which is just about how important it is at the moment to understand how your business is performing. The world has changed and is continuing to change, and it's even more important than ever for small business owners to understand where their finances are. So things we can do to help. Accounting and bookkeeping solutions are really important and actually becoming increasingly important over time. Most of you will be aware that the move to cloud or move to digital has been there for some time now. And that's really important for lots of reasons, including the way that HMRC are changing and how they work over the next year or two. So it's something that all small businesses and all individuals are going to have to address over the next couple of years. So looking at up-to-date bookkeeping and accounting solutions to help control your business is important because you can understand the numbers, but actually it will help you be compliant when HMRC make changes in due course, and those changes are coming. If you understand where your business is, by definition, it's then easier to look ahead. So business planning and cash flow forecasting, once upon a time, only really big businesses used to do that because they had the resources to do it. Now it's much easier. So every individual, every small business can now look at where the numbers are, almost real-time information, as I think Andy referred to it earlier, but it helps you look ahead as well. And that, again, is going to be important because planning at the moment, hugely important, difficult to do, but cash flow is key, and there are some liabilities that have been deferred, so you need to plan for those. And on the tax side, as I said earlier, nobody likes paying tax. It's our job as a network to help minimize those tax costs, but nobody likes surprises. If you understand what your numbers are, you're in a much better position to understand what your tax liabilities may be. So we can help you understand how to reduce them, but what they may be and when they fall due. It just helps you plan cash flow, plan for your business, and make sure they're not an unpleasant surprise that you can't deal with. Where can we go with that information we're producing, that understanding of your business? Well, we can help you make key decisions. To make a decision, you need to understand where things are. It goes back to my earlier point about the need for that up-to-date information. We can support you by giving you updates. I talked about the website and how important it is to stay in touch via the website. we've spent an enormous amount of time over the last 4 or 5 months communicating with clients, and hopefully those of you out there that are clients have recognised that. It's been a changing environment, lots of different announcements, lots of things for small business owners to be aware of, but really difficult for them to do that because of the massive things coming out. So our updates, we hope, have been helpful. Huge numbers have gone out, and we will continue to do that because we still have changes to come. Other things we're looking at: access to a range of funding solutions. Funding is really difficult at the moment. Lots of focus on bounce back loans for small businesses, but that bounce back loan opportunity will close at some stage. So we're working hard to understand what's happening in the funding market, to work with our partners, because that will change over time. And we can talk about funding alongside your finances. Based on the information coming out of your accounting system, we can help you understand your finances and what those funding needs may be. So lots of ways we can help you, lots of ways we can support you in these difficult times. What we would say is don't be put off. If you can't make it to our shops, and we've got 370 locations across the UK, as I said, we have got technology working in a way that means we can meet you through Zoom, Skype, lots of different ways. You can just give us a phone call. Lots of things we can do to help, and please do reach out and talk to us if you need to. Okay, so on that note, I think we'll move to questions. I think there have been some questions along the way, so Andy and I will try to run through this and support some answers. So, Andy, do you want to see if there's anything there?
If we start with William at the top, travel costs, is it better to fuel costs or mileage? There's going to be a couple. I've already read ahead of some of these, and it's going to be the typical tax answer, which is it depends. Because what we would need to do, William, for you is look at how many miles you're doing. For example, if you only did 10 miles, the amount that you can claim then as a sole trader is 45 pence per mile. So 45 pence times 10 is £4.50 is your deduction. That may seem very small, but if we were to do it the other way, where we would bring your car into the business and then we would look at a private use adjustment, so say you were using it for 1%, once we've done all those calculations, 1% is probably going to be very small. So we might say, actually, all of the effort for you to maintain a mileage log has to be weighed against saying, well, I've just done 10 miles. So it will depend. If you've got a lot of business mileage and have expensed quite a bit on a car, particularly if it's an energy efficient, if it's an electrical vehicle, then we may be able to claim full relief for the cost of that car in your account. So it could definitely be worthwhile then. So unfortunately, I've not given you a clear answer, because unfortunately I don't know your circumstances. But if you get in touch with us more, we can help with that sort of specifically.
On the subject of it depends, and apologies, it is, as Andy says, a common response from a tax planning point of view, but it is so very important to plan around your own circumstances. Francesca, you've asked a question about being a sole trader and what do you have to do to become a limited company, and how can you go about it. Actually, setting up a limited company is relatively simple, but it's really important you get some advice around whether that's right for you or not. So I think all we can say on that one is it's down to your personal circumstances, and that's simply a question of talking to one of our network, talking to our accountants, explaining your circumstances and where you are, and we can then tell you exactly how that would work for you.
Jackie's asked a question: can you please clarify the maximum annual amount you can pay per annum into a pension? And can you advise years if you haven't paid in any? Well, unfortunately, you can't actually carry back pension contributions anymore. That ended, I think, in 2006. So it's been a while since you've been able to do that. So you can only claim contributions which are actually made in the tax year, so we can't go back. However, there are a couple of limits, or three main limits that you need to think about when you're making pension contributions. One, do you have what they call net relevant earnings? So you can only contribute into a pension up to the amount of your net relevant earnings, and that will include income like trading income, so your sole trade taxable profits, your partnership profits. That's a hard limit, so you can only contribute 100% of that amount in. Or, as we said earlier, £3,600, because anybody in the UK residents can contribute 3,600 gross. And as we said before, the way it works is for every £8 you're putting in, the government puts £2 in directly as the tax relief, the basic rate. So that would be equivalent to £2,880 for you to put that in net. So that's one hard limit. The other hard limit is there are tax charges where you exceed the annual allowance. And the annual allowance, unless you're a particularly high earner, will be £40,000 a year. But that's quite a high limit. So if you have the earnings and you're not falling foul of the first of all, your net relevant earnings, and you have enough annual allowance, and there is a carry forward for that if you haven't used it in prior years in certain circumstances, then it could be possible to put quite significant amounts into pensions. And whether you're starting out and you want to take advantage of putting those contributions in early and watching it grow, or whether you're coming towards the end of your working career and you're thinking, I need to put more money in because I want to make provision, as we said, for the financial planning needs that you have, we can put you in touch with a financial advisor who can deal with that bit of it, but we'd be really happy to deal with all the tax side and explain what you can put in. So again, it's a bit like my first answer, unfortunately. It depends on your circumstances, but everybody can contribute 3,600 gross. So there will always be something that you can contribute in, and it may be more for other people.
There's a theme there, isn't there, really? And it is about getting good advice, unfortunately, in most cases. There's a question from William talking about IR35, so changes for contractors coming in next year, and the speculation about increasing NI contributions for the self-employed, perhaps coming out in the next statement or budget. And how would that affect those that are self-employed and sole traders? It's a really interesting question, William. The reality, of course, is we don't know. And it seems like the government is going to be caught in a difficult situation where they want to raise funds and they want to cover some of this huge cost they've been bearing, but they will want to stimulate the economy. And the small business community, those self-employed and sole traders out there, are at the heart of that recovery that they hope is going to happen. So we're just going to have to see. All I would say is that we will continue to monitor the situation. It's difficult to see past the speculation at the moment, but as soon as there's information, we will be coming out to our clients with an explanation of what's changed and a very clear view on how to deal with that. So I think that's probably all we can say on that one for now. Question from Jackie, and can both members of the partnership obtain SEISS payments?
Yeah, partners are effectively treated as a kind of group of sole traders. So you, with a partnership, you will have the partnership tax return, and you'll have the partnership profits, which are worked out, and that's then divided into the partners in that partnership. And each partner is then able to make a self-employment claim based on their partnership profit shares. So each one will be able to make their own claims.
I think what we'll probably do is stop there in terms of questions. There's a number that are coming in. Excuse me. We will get back to you in terms of those individual questions and make sure we try and help. If we need to, we can signpost you in the direction of our nearest accountant and network. We know this is a complex topic and a very wide-ranging topic. All we wanted to do today really was to give you a feel of some of the areas that may be relevant to you and just demonstrate some of the ways we can help. And hopefully we've explained that there are a lot of things you can do to try to look at and hopefully minimise your tax liability. So do look out for more information for us, and we will, as I say, get back to you on questions. Just to leave you with a final message, really, we are still very much open for business. We know it's difficult times. We've worked incredibly hard to try to support our clients along the way, and we will continue to do that. But if there are any further areas you think we can help with, we are still there. We are still looking to support our clients. So please do talk to us if you need to. So nothing else from me. Andy, anything else from you? No. In which case, thank you all for joining us. We hope that's been helpful. Please do stay safe. Please do look out for more webinars and more information from us. And we hope to see you soon. Thank you. Thank you.